Holding silver isn't just about buying it. The real challenge is knowing when to let it go. It's easy to get caught up in the thrill of a rising market. But 2026 feels different for a lot of us. You probably have a stack sitting in a safe or a lockbox right now. Maybe it's coins or maybe it's bars you've held for years. Have you actually thought about the price that makes you sell? Most people wait too long. They watch the charts climb and get greedy. Then they watch the price crash and regret not moving sooner. I don't want that to happen to you this year. An exit strategy is basically a contract with yourself. It's a plan you make while your head is still clear, before the market hype starts clouding your judgment. Look at how volatile the last few months have been. Prices move fast, and the exit window can be surprisingly small. You need to decide if you're selling all at once or in stages. I prefer a tiered approach myself. Selling everything at one price point is risky. What if the price keeps climbing after you're out? But what if it drops before you sell a single ounce? It's a balance between profit and protection. Think about why you bought silver in the first place. Was it a hedge against inflation? Or were you looking for a quick speculative gain? Your original goal should dictate your exit plan. If you're holding for a total economic collapse, you might never sell. But if you want to pay off your mortgage, you need a target. Write that number down today. Honestly, seeing it on paper makes it real. Are you waiting for $50 an ounce? Or is your target based on a specific life event? Some people sell when they reach a certain age. Others sell when they find a better investment opportunity like real estate. Don't let emotions drive your decisions in 2026. The market doesn't care about your feelings or your diamond hands. It only cares about supply and demand. Industrial use is up, but that doesn't mean the price will stay high forever. Have you checked the buyback rates at your local coin shop lately? The spot price is one thing, but what you actually get in hand is another. Premiums can disappear overnight when everyone starts selling at once. You don't want to be stuck in a line at the dealer when the panic starts. Timing. The absolute peak is almost impossible. It's better to be a little early than a lot late. Think about the tax implications of selling your stack. In the US and Canada, the rules can be a bit tricky. Are you prepared for the paperwork? Selling physical metal is different than selling a stock. It takes time and physical effort to move. Let's look at the indicators that tell us the top is near. It starts with the news cycle. When your neighbor who knows nothing about silver starts buying, take note. That's usually a sign that the market is getting crowded. Retail FOMO is a powerful indicator of a looming peak. Keep an eye on the gold to silver ratio. Historically, this ratio tells us if silver is undervalued compared to gold. In 2026, the gap has been closing steadily. If that ratio drops to a historical low, it might be time to scale out. Are you watching the dollar index as well? A strengthening dollar usually puts downward pressure on precious metals. Don't ignore the interest rate environment either. Higher rates can sometimes make non-yielding assets like silver less attractive. But we've seen silver defy those rules before. That's why you can't rely on just one signal. I look for a combination of 3 or 4 factors. Is the industrial demand from solar panels still growing? Or has a cheaper alternative hit the manufacturing market? Technology moves fast and can change the demand for silver overnight. Consider the physical logistics of your exit. If you have 500 ounces, that's a lot of weight to carry. Do you have a secure way to transport it to a buyer? Shipping silver is expensive and requires high insurance costs. Selling locally might be faster, but the pool of buyers is smaller. Maybe you're thinking about selling to an online bullion dealer. They usually offer fair prices, but the process takes about a week. Can you handle a price drop while your silver is in the mail? Locking in your price before you ship is a critical feature to look for. Not all dealers offer that protection. Let's talk about the all or nothing mentality. Many stackers feel like they are betraying the community if they sell. That's a dangerous way to look at an investment. Silver is a tool for building and preserving wealth. If it has done its job, it's okay to use that wealth. Would you rather hold a box of metal or a paid-off home? For me, the goal has always been financial freedom. I'm planning to sell in 20% increments. My first sell order triggers when we hit a new all-time high. The second trigger is $5 above that. This way, I'm locking in gains while staying in the game. What if the price never hits your dream target? You need a time-based exit as well. If silver hasn't moved by the end of 2026, will you keep holding? Opportunity cost is a real thing. That money could be earning interest or dividends elsewhere. Every year you hold, you're essentially betting on silver again. Are you still confident in that bet today? Let's look at the specific types of silver that are easiest to liquidate. Government minted coins usually carry the highest liquidity. Think about the American silver eagle or the Canadian silver maple leaf. Every dealer knows exactly what they are and how to price them. Generic rounds and bars can sometimes be a harder sell during a rush. Some dealers might want to assay your larger bars before paying out. That can add days or even weeks to your timeline. Are you prepared to wait while the price potentially drops? In 2026, the tax man is watching closer than ever before. In the US, silver is still classified as a collectible by the IRS. That means your long-term capital gains could be taxed up to 28%. It's a steep price to pay for being successful. Selling small amounts over time might help keep you in a lower bracket. In Canada, you have the personal use property rules to consider. If your gain is under $1,000, you might not have to report it, but once you start moving real weight, the CRA wants their share. Always keep your original receipts from when you bought the metal. Your cost basis is the only thing standing between you and a massive tax bill. Did you include the shipping and insurance fees you paid when you bought it? Those costs can be added to your basis to lower your taxable profit. Most people forget those little details and pay more than they should. Have you looked at the current industrial demand lately? Solar panel production is eating up silver at an incredible rate. Electric vehicles and AI data centers are also competing for the same supply. This industrial floor is what makes the 2026 market so interesting. It's not just about investors or precious metal bugs anymore. Big tech companies need this metal to keep their factories running. They might even start buying directly from the market to secure their needs. If that happens, we could see a massive supply squeeze, but even a squeeze eventually finds its peak. You have to decide if you want to be the one selling to them. What's your plan if the price hits $100 an ounce? It sounds like a dream, but in a volatile market, it's a possibility. At that price, a single monster box is worth $50,000. Walking into a shop with that kind of value is a serious security risk. Privacy becomes much harder to maintain when the numbers get that big. Do you trust your local dealer to handle a transaction of that size? Maybe it's time to look into private vaulted storage with a sellback clause. That allows you to sell with the click of a button without moving the metal. It's convenient, but you lose the if you don't hold it, you don't own it factor. There is always a trade-off between security and convenience. Which one do you value more in a crisis? Let's talk about the psychological side of selling. It is incredibly hard to click that sell button when everyone is shouting him to the moon. The fear of missing out is a stronger emotion than the fear of losing money. But remember, you haven't actually made a profit until you sell. Paper gains can vanish in a single afternoon. I've seen it happen too many times in this market. The winners are the ones who have the discipline to walk away with cash. You don't need to catch the absolute top to be successful. Making a 20% profit is better than holding through a 40% drop. Think about what you will do with the currency once you have it. Cash is only a temporary parking spot for your wealth. Inflation in 2026 is still eating away at the value of $1. Are you planning to rotate that profit into a different asset? Some investors move their silver gains into dividend-paying stocks. Others look for undervalued land or real estate. Don't just sell your silver and let the cash sit in a checking account. The bank isn't going to give you a return that beats the cost of living. Have you considered the risk of bank bail-ins or freezes? If you sell your physical silver, you are moving back into the system. For some, that is a scary thought after years of being their own bank. But the system is where you spend your wealth to live your life. You can't pay your property taxes or buy groceries with silver rounds easily. At some point, the conversion back to local currency is necessary. Look at the current geopolitical landscape before you make your move. Are we in a period of relative peace, or is global tension rising? Silver usually thrives when the world feels uncertain. If things look like they are calming down, silver might lose its luster. But if new conflicts emerge, the safe haven bid will drive prices higher. Keep an eye on the central banks and their silver reserves. While they mostly talk about gold, silver often follows the same trend. Is there a shortage of physical bullion at the major mints? When the US Mint or the Royal Canadian Mint stops production, pay attention. That usually signals that the physical market is decoupled from the paper price. In that scenario, you could get a massive premium for your physical coins. Don't just accept the spot price if the mints are empty. Your physical silver is worth what someone is willing to pay to hold it right now. I've seen premiums on silver eagles hit 70% over spot. Selling during a physical shortage is the ultimate exit strategy, but you have to be ready to act while the demand is at its peak. Have you talked to your family about your exit plan? If something happens to you, do they know how to sell your stack? Silver can be a burden for heirs who don't understand its value. They might take it to a pawn shop and get 40 cents on the dollar. Education is a part of your strategy too. Make sure your loved ones know the difference between a rare coin and bullion. Keep a list of reputable dealers with your stack. It saves them the stress of figuring it out during a difficult time. What about the buyback guarantees from the place you bought it? Many online retailers promise to buy back what they sold you. Read the fine print on those guarantees today. Sometimes they only buy back at spot price, regardless of the premium you paid. Is that a deal you're willing to take? Probably not if you paid a high premium for a specific year or design. Look for local buyers who specifically want what you have. Collectors will often pay more than a bullion dealer will, but finding a collector takes more time and effort. Do you have that time, or do you need the cash immediately? Urgency is the enemy of a good exit price. Urgency is the enemy of a good exit price. If you need money by tomorrow, you're at the mercy of the buyer. That's why I recommend keeping a small cash emergency fund. It prevents you from being forced to sell your silver during a market dip. Selling on your own terms is the only way to stay in control. Look at the seasonal trends for silver prices. Historically, silver often performs well in the first few months of the year. The summer months can be a bit stagnant or even see a slight pullback. Could 2026 follow that same pattern? If it does, your best exit might be earlier in the year than you think. Don't wait for the end of the year just because it's a nice round date. Watch for the parabolic move. This is when the price chart looks like a straight line going up. It's the most exciting part of a bull market, but also the most dangerous. Parabolic moves almost always end with a sharp, painful correction. Most people try to ride it to the very top and get caught in the collapse. Selling while the price is still going up feels wrong in the moment. Your brain will tell you that it's going to keep climbing forever. But that is the exact moment you should be handing your silver to the next person. Let them take the risk of the final 5% gain. You should be happy walking away with the 95% you already locked in. Have you thought about the silver to gold swap? Maybe your exit strategy isn't moving into cash at all. You could trade your silver for gold when the ratio is in your favor. This keeps your wealth in precious metals, but in a more stable form. Gold is less volatile and easier to store in large dollar amounts. It's a classic move for veteran stackers who want to preserve their gains. Would you consider moving half of your stack into gold this year? It's a way to de-risk without leaving the metal market entirely. What about the impact of digital silver or silver-backed cryptos? In 2026, these are becoming more popular for quick trading, but they don't have the same privacy or physical security as your stack. If you're selling physical, you're moving away from an untraceable asset. That's a big step for a lot of people in the community. Is the loss of privacy worth the gain in liquidity for you? Only you can answer that based on your personal situation. Let's look at the mining supply figures. New silver mines take years to start producing. We've seen a supply deficit for several years in a row now. At some point, that deficit has to be reflected in the price. But high prices also encourage people to recycle their old silver. Grandma's silverware and old jewelry start hitting the melting pots. That secondary supply can dampen a price rally unexpectedly. Are you seeing more "we buy gold and silver" ads on TV lately? That's another sign that the secondary market is waking up. It means the easy phase of the bull market might be over. Check the inventory levels at the COMEX and London warehouses. If those vaults are draining, the price has nowhere to go but up. But if they start filling back up, the party might be winding down. It's a lot of data to track, isn't it? But being an informed seller is how you beat the crowd. Being an informed seller is how you beat the crowd. Most people just follow the headlines and hope for the best. But hope isn't a strategy when it comes to your hard-earned wealth. You've spent months or years building this position. Don't let a lack of planning ruin the finish line for you. Take a look at your silver right now and be honest. If the price doubled tomorrow, would you actually know what to do? Would you drive to the local shop or call an online dealer? Knowing the steps ahead of time removes the panic from the process. Write down the names and numbers of 3 buyers you trust. Check their current spreads to see who is giving the best deal. Some dealers pay more for bars, while others want government coins. Matching your inventory to the right buyer can save you thousands. Think about the security of the transaction itself. If you're selling locally, always meet in a safe, well-lit place. Many police stations now have safe exchange zones for this reason. Never tell a stranger how much silver you have at home. Your safety is worth more than any profit margin. What if you decide to keep holding through 2026? There is a chance silver could stay stagnant for another decade. Can you handle the mental fatigue of a sideways market? Silver is a test of patience as much as it is a financial asset. Many people give up right before the big move happens, but just as many stay far too long and lose their gains. I want you to be the person who exits with a smile, the one who used silver to achieve a real-world goal, whether that's a new car, a college fund, or peace of mind. Silver is just a vehicle to get you where you want to go. Don't get emotionally attached to a piece of metal. It doesn't love you back, and it doesn't know you own it. Keep your eyes on the data and your hands on your plan. The 2026 market is going to be a wild ride for all of us. There will be days of extreme optimism and days of total doubt. Tune out the noise and stick to the numbers you wrote down. If you hit your target, take the win and don't look back. Regret is common in the precious metals world. People regret buying too late or selling too early. But you can't pay bills with what-ifs. Realized profit is the only metric that matters in the end. You've done the work of stacking and protecting your wealth. Now, do the work of making sure you actually get to enjoy it. The exit is the most important part of the journey. Are you ready to make your move when the time comes? I've shared my strategy, but the final call is always yours. Trust your gut, but verify it with the facts on the ground. Watch the charts, but watch the real world even closer. 2026 could be the year that changes everything for silver holders. Make sure you're on the right side of the trade. Good luck with your stack and your strategy. I'll be right here watching the market with you.